Bitcoin is holding steady. Let's go to the daily chart. Now, look at what pattern Bitcoin's making. So if we look at this pattern, and then it popped up, and then it kind of here, and then popped, kind of the same sort of pattern. So at this point, this would be considered a beginnings of a bullish pattern. It's not fully mature yet, but essentially this would imply to me that the bias is slightly bullish now as we continue to form this pattern for a double top, all right?
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Gareth Soloway shares his latest Bitcoin insights, price targets, market risks, and key levels. Let's dive in and explore.
Gold should continue to sell off. That's exactly what it's doing. Why is gold selling off? Because it's risk on, right? So people are saying, why am I holding gold, which is kind of a safe haven? Everything looks, and I'm being a little facetious and comical here, but people are saying, oh, everything looks perfect. Everything's going to be great. Everything's just fine. So gold is coming in, but that chart's predicted that, right? And this is the beauty of it. Here's your topping tail. Here's your parallel channel. And we knocked that out of the park. I mean, I went out on a limb when everyone else was bullish. And I even talked in the game plans about how, listen, this is where I make my bones, is by going counter when everyone is screaming, oh, gold's the greatest thing. I say, wait, it just hit a technical level. Then it put in a daily topping tail. It's short-term pulling back. And look, this is the zone I told you guys to watch. This level down here. Excuse me. So again, we're looking at that coming back into that level. And that will be a level where actually at that point, I think it bounces. NVIDIA has made a strong move up here. But look at this trend line. Pivot to pivot to pivot. Broke down. Retraced to the scene of the crime. Fell down. And look at where it's back to. So again, yes, the semiconductors are strong. There's been kind of this hope that a lot of the restrictions on the semis that were put in by the various administrations, locking them from or blocking them from selling their chips to overseas countries. Now they're kind of being semi-rolled back. And so you're seeing the semiconductors catch this big bid. But for me, looking at these levels, this tells me it's a story that, yeah, sure, there was upside there in NVIDIA, for instance, but now it's getting into a level where you want to be a little bit cautious. Essentially what we would call a retrace to the scene of the crime, right? Here it was, hit, bounced, broke down. Almost like a head and shoulders, frankly, right? Basically a head and shoulders pattern there. Shoulder, head, shoulder. A little small shoulder here, but nonetheless, back to the neckline right here. That, again, could be a small signal to be just on alert. And then, of course, I talked about the VXX here. Look at the VXX, guys. So yesterday, the VXX ended basically flat on the day, yet the markets, the NASDAQ in particular, was up about 1.6%. The S&P was up almost 1%. Generally, if you know how the VIX works, the VIX is a fear gauge. And so the VIX or the VXX should be going down when the markets go up. When it doesn't behave in that manner, you start to say, okay, is this a heads up by institutional money that there could be something lurking here in the markets that's basically going to be a pullback? And again, who knows if we go and make new lows? Eventually, I do think we do. But in the very least, a simple pullback is tradable for me as a swing trader on the chart.
Excitement is building among XRP holders as CME Group officially announced May 19 as the launch date for its XRP futures contracts. This move signals a major milestone for the asset, marking its entry into one of the world's most respected derivatives markets. The futures will be offered in both standard and micro-sized formats, and will operate under the oversight of the U.S. Commodity Futures Trading Commission, CFTC, adding a layer of regulation and legitimacy to XRP's trading environment. The announcement follows previous hints, including a briefly visible beta test page on CME's website that pointed to internal preparations. Now fully confirmed, this launch puts XRP in the same league as Bitcoin and Ethereum on CME's platform, showing growing institutional confidence in the digital asset. This follows the earlier introduction of Solana-linked contracts and further expands CME's crypto footprint. XRP is already trading at $2.61, and the days leading up to May 19 are expected to be filled with anticipation. Industry analysts believe this could spark renewed volatility or a potential price climb. With regulated futures from platforms like Binomial already in play, and ETF applications from firms like Franklin Templeton, XRP's presence in institutional finance is gaining real traction. All eyes are now on May 19 as a bullish turning point.
Now, looking at the 10-year continues to climb. Now, the 10-year yield, folks, please understand this continues to be a warning sign. When yields go up, it's the equivalent of the Federal Reserve hiking rates, right? So again, the 10-year goes up. That means the 30-year is going up. Basically, all the bond divisible timeframes are going up, right? And so basically what that's telling us is that money is becoming more expensive. To borrow money, to take out a mortgage, to refinance, to use margin for buying stocks, it's all going up. And so the idea is that generally as the yields have gone up, and if we take a look at the 10-year yield, I mean, think about this. We've seen a rally from about 4.1 on the 10-year to now 4.5 on the 10-year. That's a 40 basis point hike. That's almost the equivalent since May 1st, since just the 1st of this month, in 2 weeks. That's the equivalent of almost two hikes, 225 basis point hikes by the Federal Reserve, or a 50 basis point hike, right? So again, think about that and what that's doing. Now, so far it has not influenced the markets, but at some point, if yields keep going up, and they're up again today, do we retest this level here? That's going to be your first resistance just below 4.6. And at what point does it become problematic for the market? Another thing to keep in mind here, look at the U.S. dollar. So remember last week I talked about the U.S. dollar. Here was your upsloping trend line, classic pivot low, classic pivot low. We tagged it right here. We bounced, we broke down, we confirmed. What do I always say happens? What is the most probable outcome? I say once you confirm a breakdown, you eventually retrace to where? The scene of the crime, essentially retracing back to that trend line. Well, look at what we did here on Monday. We went right into the scene of the crime. The dollar is now starting to pull back. So in theory, right, based on probabilities, we should see the U.S. dollar, obviously chopping, but in general, will start to go even lower. I have my next longer term target price by basically, let me flip to my weekly chart here. Here it is. If we go to the lows from 2011 and connect it through this low, our downside target on the DXY would be just below 97. And again, right now we're trading at around 100.67. So that's about a $3 drop on this here to the downside, a little over $3. And that would be your point. Now, if the dollar is going lower, in general, it would probably insinuate the economy continues to slow.
Bitcoin's market saw intense action recently, with a massive 100x liquidation of short positions happening in just 4 hours. The price surged to around $103,400 before facing resistance, and that brief spike was enough to wipe out traders using extreme leverage. Many short positions were heavily overleveraged, some at 100x, and couldn't survive even the slightest price jump. As Bitcoin managed to stay above the $103,000 level, those betting on a correction were quickly caught off guard. Bears tried to stop the rally, expecting the momentum to fade. But bullish buyers stepped in with force, triggering a wave of margin calls. A cluster of liquidations followed, especially in the $103,400, $104,000 zone, according to heat map data. Despite this aggressive liquidation event, Bitcoin hasn't retested its all-time high of $109,000 just yet, leaving traders wondering whether a breakout is still on the horizon. Currently, Bitcoin is trading above its key exponential moving averages, which signals strength. However, whales are showing hesitation. They're entering short positions near recent highs, suggesting skepticism about the rally's sustainability. If Bitcoin can hold above $103,000 and turn $104,780 into support, a push toward $106,000, or even a retest of the $109,000 peak, could be next. For now, the market waits to see whether bulls can maintain control. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.